You are setting your stop loss wrong, and it's not your fault. You were taught the basic method, not the method pro traders use. In this video, I'm going to rewire how you think about stop loss and take profit. With advanced logic, market context, and trading experience, I will show you the real chart in a simple way for you to never over-risk again. This isn't a theory. This is how pro traders trade profitable with a 40 to 60, 70% win rate. Let's break down the algorithm together. Now, first, let's understand what is a stop loss for beginners. Stop loss, it's a price level where your trade will be closed automatically if the trade goes against you. Take profit, it's a price level where the profit will be taken. Now, when it comes to trading, the biggest lie is you will find on the internet or social media networks that you should risk in this way. Your risk to reward ratio should be in this way. 1:2 reward ratio, meaning that you are risking 1 to profit 2 times what you are risking, and you will win. That's outdated. The market doesn't care about this. The market does not care about this. Let me explain so that you understand in a much better way. Now, if you are trading, you must understand first thing, market context. Let's talk about the time frame. Time frame, it's important. M1 to M30, it's a recommended time frame for you to get an entry. Then H1 to MN, it's a time frame for you to find direction. That is simple to understand. And market context. Remember, the time frame here represents the candlestick. So each and every candlestick, if right now we change to 5 minutes, just like here, US dollar versus the Singapore dollar, every bar that you see here represents 5 minutes, which is the candlestick that we need to find to confirm an entry. Now, let's look at this scenario over here so that you can understand the average trader, how they place a stop loss. Let's say in this case, we applied what we call a support entry. Now, we want to buy here because we have a support area here, marking the box here, or rectangle box, marking the lowest price here. This is our support area, and we want to buy here. Average trader will take a buy because they see an engulfing candlestick pattern, and this engulfing candlestick pattern confirms that we are buying. Now, for some of you who do not know candlestick engulfing pattern, how to read candlestick, we have tutorials on this channel. Please make sure that you subscribe, you watch, and you follow Bozza the trader. Now, when you buy here, you place a stop loss where below the previous low price of this support area. Then what happens next is that if the market keeps moving like this, you'll be stopped out here. Then you lose the trade. Then it will go to your direction, and you feel bad that the market is against you. So this is an average trader, but if you do understand how to align the time frame, how to actually trade this, you can trade in this way. Let me make this in a much easier way for you possible to actually take an entry. We have what? A structure. You can use a structure to place a stop loss. In your structure, you have what? You have your candlestick. You have your candlestick that you can use, and this candlestick represent what? Represent the price action. The price, what? Price action. Price action, we're looking at candlestick, how they move, how they connect and react over time. We are looking for this. Now, if right now you're looking for a structure using the candlestick, then you have your confirmation using what? The smaller time frame, such as 5 minute, 15 minute, or 1 minute. This is how you can actually use that. But you must understand the logic of a candlestick, the context of it, and you must develop a trading experience. Now, a logic of a candlestick, as I showed you here, you can enter with the candlestick pattern of engulfing, a candlestick pattern, a candlestick that is like this. Let's actually do our drawing well so that we can be able to see well. A candlestick like this. Now, you can actually enter a trade here. Entry, place a stop loss below here. Now let's look at an example that is logical for you to actually remember and do not forget what I've said. This another candlestick pattern that you can use to get an entry, and this is another candlestick pattern to use for you to get an entry. So now we're talking about price action. Now, what if you use indicators? We have indicators in Forex. You can use also indicators under the market, the structure. Now, if you don't decide to use the candlestick, you can use what? Indicators. Indicators. Now, indicators, they're much easier. You can use moving average. But if you have moving average, in your structure, you have your skeleton of what? Of support and resistance. Support area is below like this. Your market bounced like this with your skeleton, making a W pattern. And now you want to buy here, right? You want to buy here, you can add your indicators to confirm whether we are buying or selling. So in this case, let's go ahead and add our indicator. Which indicator we want to add? A moving average, which is much easier to, we keep it at period 10 and we click on save, then we go back. Now, if we go to look here, you can see that we made a buy after this candlestick crossover our moving average. Then it continued to that direction. You can see how easy it is to mix an indicator to buy, then set a stop loss. So now let's actually go ahead and make that order that we were supposed to buy here because of the candlestick that cross over the moving average, and we place a stop loss below this candlestick, this 1-2 candlestick. We place a stop loss there. Now that's how you use the indicators to place a stop loss. Now if you decide to go with the route of using the candlestick, now you can buy with the engulfing, but when you buy with the engulfing, most of the time you must understand that in engulfing it's valid only if it's the only candlestick from the lower price. You can see here we have 1, we have 2, we have 3. We have 3 candlesticks, and this one shows the lowest price point. This one shows the mid lower price. This is the low. This is the higher low. This is higher low. Okay, so a candlestick of engulfing must be the only candlestick engulfing that is actually there to confirm whether we are buying or selling. So I trust you understand if you decide to use the candlestick for selling or buying. Now, there are many scenarios that we can use here for you to actually gain a better understanding, but do not rely on indicators alone. Please do not rely on indicators alone. Now, let's look for another example here. Here's another example. We have your skeleton here of a W formation. You can buy here. Stop loss will be below here. Trust you do understand as how we set a stop loss the most simplest way. Now you can see your skeleton here. There it actually went to the high price, liquidity hunt, and you make a sell here. Stop loss will be above there. Simple and easy. That's actually the trading logic. Now, market context, we talked about the time frame. The time frame that you must find you must find the entry confirmation in a smaller time frame. Now, once you've found the entry confirmation in smaller time frame, what you need to do next is that where are you placing your take profit? Take profit, you can use now your resistant area if you're moving away from the higher price resistant area. Simple. Support area, because you're moving from the above, so you can use that. Simple and easy. So I trust now you will actually apply this. Let me know on the comment section below if you have some difficulties in actually understanding this, because this is the most simplest thing that you can do to actually find an entry of a sell or a buy. If this makes sense to you, please let me know on the comment section below. And if you had any difficulties on this section of setting the stop loss, the take profit, let me know so that I can assist you in a much better way. Now, 95% of traders, I want to add this as a tip. They copy other people's stop loss, and if you copy stop loss, it's not a bad thing. But if you do not understand the context, the logic, the trading experience, then you'll mostly likely to lose. So stay away from copying other traders' stop loss, right? And please do not set a stop loss based on desire, right? Do not base a stop loss based on desire. You must place a stop loss based on the logic, context, and experience. Simple. So this is how you'll be able to stay ahead of the 95% that are losing money. Make sure that you understand what I've already shared with you. This is the only way for you to actually set a stop loss. So if I told you how I set a stop loss, you will not believe me, but let me share with you how I do set a stop loss, because some of the traders, they'll be asking me, Bozza, how do you actually set a stop loss? Let's make an example of this one here, trade here. Let's look at this trade here. When I set a stop loss, the number of points you must be aware of. So I look at the number of points at how much money do I have here. So if I have to make a buy here, let's say I buy with 0.05, and I needed to risk $79, right? I would have to make sure that I use a price action candlestick. I do not use the indicators. Yes, sometimes I used to use indicators back in the days. So after understanding that this is how much I'm risking. So most of the time, for me, I do not like to trade the currencies because of what? Because when we go to margin, there's too much margin. The margin that is needed for a currency is too much. So I will actually most of the time trade volatility 75, and maybe let's say right now I make a sell position here. I take a sell position, I go to trade, and I see that the margin is 1. Then I go to chart. I want to actually make this practical. I tap here on SL, then I see SL, I see TP. I tap on this one. Since it's a sell, stop loss must be above. Then this is how much I would like to actually risk. You can see this is $5.72. So right now on balance here, I can have the $5 because the margin that I need here, it's only 1. And remember, margin is not money that you should be, it's not money that you actually supposed to lose. So margin is a money that's supposed to be there, and it should not actually be something that you add on risk. So margin is the money that should be there, but should not risk it. So what about TP? I take TP because of the skeleton of high price and lower price. We're moving from high price to lower price. Simple and easy. So if you've made it this far, you're already ahead of the 90% of traders. Now, I want you to go back to your last 3 losses and ask, was your stop loss protecting your account or protecting your ego? Hit like and make sure that you subscribe. Please drop a comment in the section below. Make sure that you let me know about how you risk. Are you a smart trader? Risk? Are you over-risking, over-trading? Let me know in the comment section below. For those who like to join mentorship lessons, please make sure that you follow me. We provided the details for you in the video description below, and make sure that you subscribe to our YouTube channel. This is our YouTube channel, Bozza Trader. And also we have a WhatsApp group that you can join on TikTok. You can find the real account of Bozza. Stay blessed.